once, been the AI winner. Let's bring in George Tsilis, senior market contributor here. George, when you look at this stock, we've talked about it with you a couple times. It's about valuation, right? I think a lot of the fundamental analysts talk about that all the time. But that doesn't seem to matter to investors, especially the retail side at this point, because they keep driving this stock higher, right?
They are, and I think we talked about these themes that are happening. We talked about Cloudflare yesterday, or symbol net, that's higher today as well. Obviously, these are not the largest, tech companies out there. I mean, if you look at Palantir from a market cap standpoint, it's about $250 billion. It's a large company now from a market cap standpoint, but nonetheless, I think the theme right now and what we're seeing is this sort of parabolic move in the software space. Is that I think what's happening, we're seeing some software networking names like Net and Palantir continue to trend to the upside. And there's no doubt, if you just look at Palantir's numbers last quarter, they denoted commercial revenues up 54%. If you look at government revenue, up 45%. There's pretty much a balance now in terms of commercial and government sales for the business. I mean, it was born from government contracts. They're now essentially utilizing their decision analytics and AI software for the private sector. So they're growing in both those areas quite substantially. And ideally speaking, the guidance for the full year at around 31% top line sales, and the earnings just continue to manifest higher, but it's not keeping up with the price. And you're right, that's where the concerns are with the company's stock price action. Now, obviously, when they had the earnings, we're seeing a gap and a go situation or a continuation of the upside. I think in the context of the overall market, we're seeing the hardware names. We're throwing Apple in there. You can throw in NVIDIA. You can also, consider some of the other Mag 7 names that have been weak. Google, for instance, has been trading poorly. So Broadcom as well. So I think the semiconductor hardware space is taking a back seat. And so that's putting the software and the networking companies in the front seat or the driver's seat right now. And of course, the retail traders, and I'll bring that up, the retail traders latch onto these themes. So I think there's a theme going on. There's a narrative. The company is growing, but at the same time, if you just look at, this year's earnings for fiscal year 2025 at 55 cents, it's 200 times this year's earnings in terms of the forward multiple. Even next year, the estimates right now are around 70 cents. So that's about a 27% increase from this year to next year, with sales that are expected to grow around 21% to about 4.7 billion next year. But again, even next year, the stock is trading around 160 times earnings. And so for what it's worth, obviously these parabolic trends are very powerful. But they also, can dissolve quite quickly as well.
Yeah, George, there's video game numbers, and then there's this, right? And then there's Palantir. These numbers are absurd, but there's reasons why the stock has rallied, right? With their ability to take their niche in AI, which is gathering all the data and helping in the actual decision process, that got them in with the government. Then, when they were able to make that same product for small and medium businesses, that's when this stock went crazy, because a lot of people didn't think they were going to be able to do that. Now, it's just a growth machine. All that good news said, George, come on with the valuations. At some point, you've got to say enough is enough here, George.
Well, I think that's what the market is telling us. If you look at the short interest, I'll just add, that tidbit. It's right around 3.5%. It's down drastically. So a lot of this move, I suggest, may be, I can't say for sure, short covering, because now the shorts are getting squeezed tremendously. So as that short interest goes down, you have to find more buyers that are buying because of the catalyst of the business, not because they're buying to cover their short. So that's something to keep in mind. There's no doubt. I mean, the business and the technology, the decision analysis, and of course the DoD intelligence component of their business is now being converted over to business intelligence, helping, of course, companies across every industry group make better decisions. And that's the value proposition of software. I think also there's a bigger picture context we have to consider. There's a lot of going on between U.S. and China, and if you look at U.S. military, we're a very expensive military, and ideally speaking, China is moving in the direction of military that doesn't include lots of hardware. In other words, infrastructure like aircraft carriers. They're more tech-orientated military that has higher yield. And in the context also of the DOGE, federal spending, I suggest maybe the military will be more focused on, technology-driven spending versus hardware spending. And that might be evolving over time. And that's where Palantir is also capitalizing. So there's a lot going for the company, there's no doubt. But for what it's worth, again, trends can continue longer than you expect them. We know this, historically speaking, and just by experience. But overall, again, they have to continue to move the bar higher in order for the stock to continue higher. But again, the last thing I'll reiterate, short interest is getting very thin in the stock.
Yep, those shorts, if there was any shorts in there, just been getting pummeled. George, real quick before I let you go, I look at some of the analyst notes on some of these stocks. There's a guy out of Jefferies, Brent Till, that recently came out after their earnings, said spectacular quarter, right? He's still got an underweight rating on the shares, even though he raised his price target to $60. But he's talking about that if they need the stock price equivalent as far as valuation goes, that they would need 50% growth rates for the next 4 years for that to come to fruition. They announced that they're going to grow 31% next quarter. That's great growth numbers, but as Kevin mentioned, this is valuation. Yeah. But that's not to say that the stock can't continue to move higher, right?
Yeah, that's the thing, and these growth numbers can change, but some of the projections in terms of price relative to actual projections given by the company. Now, there's a little bit of a mismatch. I mean, if you just consider sales for 2026 now, this is next year, it's right around $4.7 billion. So a $254 billion market cap, just, give or take a few billion, it's trading around 55 times sales. So it's trading at 55 times sales, 160 times next year's earnings. So price earnings, price to sales, all these metrics speak to, lofty valuations. But it doesn't mean the company can't grow into that in some capacity.
Right.
But once again, it doesn't matter because valuation gets thrown out the window once there's a momentum latching, I call it, by momentum traders and retail investors, because they're really capitalizing on the short squeeze, which is going on, I suggest, right now.
All right. Great breakdown for us. Appreciate it. That's George Tsilis, Senior Markets correspondent here, breaking down Palantir. Kevin.